I had a different video queued up this week to show you some really great places to live in the Portland metropolitan area, but I want to do this one instead because there's been some big changes, some changes that a lot of people did not anticipate that's going to affect the housing market both now and coming into 2025. It's also going to affect rentals as well. So if you're like so many people that watch this channel living in Oregon and you're thinking about moving or relocating to this area, you're going to want to watch this video. Stick around. Hey everyone, welcome back to the channel Living in Oregon, or if you're new to this channel, my name is Seth Marchant. I'm your host, licensed real estate broker in the state of Oregon and Washington. We make new videos every single week to show you what it's like to live here. A lot of the videos will tour you around neighborhoods, really giving you a feel for the area. But we also do videos like this that are really informational and informative and are designed to help people through this process of moving to Oregon. Like I mentioned, I'm a realtor, so we work with home buyers. In the state of Oregon, there is no realtor relationship, so we don't facilitate rental transactions, although we do keep our fingers a little bit on the pulse of the rental market because we often get questions about it. And some of our buyers, of course, are renters before they become buyers. But this is going to impact both, so I want to dig into this very quickly today. So what happened recently? Well, the talk over the last, let's say 4 years or so, since 2020, since lockdowns, has been low inventory, which has really made it a seller's market. It's made it very competitive for buyers. And then interest rates. We had lower interest rates for a while, and then rising interest rates, and interest rates really having an impact on the market. So the inventory and interest rates really kind of been the two big stories over the last 3-4 years or so. And so rates have kind of been higher lately, as you may have heard. But recently, the federal government, the federal funds rate, cut interest rates by about 0.5 percentage point. So that was exciting for a lot of people. If you've never looked at mortgage rates or mortgage payments and how much a rate can affect your payment, 0.5 point or a percentage point will impact your monthly payment quite a bit. So that's a big deal. And so with the Fed recently cutting rates, which was just about a month ago, people were anticipating mortgage rates to go down. But what actually happened was that the lenders had anticipated the Fed's cutting rates at the end of this year and sort of priced that in around halfway through this year. So the rates sort of fell. It had been falling right coming into the Fed's cut. And then when the Fed cut, actually the rates went up a little bit, and that confused people. So rather than looking at the federal funds rate, something else that's going to impact mortgage rates, if you haven't heard this before, to give you a little bit more insight as to what to expect going forward is going to be the 10-year Treasury yield. As we can see, this is going to bring us up the 1 day, and as you can see, it's gone up for today. That's been the trend recently, but let me show you the year to date. And what you're going to notice, if we go back to, this was the past year for 30-year fixed conventional rates. So we started higher in the 7s coming into last year. And then once we came into the new year, rates were dropping down. They started to begin to raise a little bit up until mid-year. If you watch the 10-year note, it's very, very similar. We had the highest yield return around the middle, coming into the middle of this year, and then we see the yield started to go back down. So these things do tend to mirror themselves pretty closely, and the reason why that is because this bond right here competes with other bonds in the bond market, one of them being mortgage-backed securities. So mortgages have to compete. The same people that purchase these products also purchase mortgage-backed security products. And so this is competitive essentially with mortgage rates. So we've seen a lot of people over the past month or so expecting interest rates to go down with mortgage rates, but yet they've gone up. And they may continue to go up. This is the federal funds rate right here. Why does this rate go up and down? Why did the Fed raise rates back in 2022? Why do you see this dramatic incline right here? What this is what it looks like to kill inflation. So when the economy is good, when the jobs rate is low, there's lots of unemployed people, People have discretionary spending. People tend to spend more money. When people spend more money, inflation tends to go higher. So by raising interest rates, that's the Fed's tool to attempt to kill inflation. And then when the economy isn't doing as well, the Fed lowers rates in order to make it cheaper for people to borrow money and start businesses and all those things that will stimulate the economy and get people back to spending again. So with the federal government feeling like they have tamed the persistent inflation, they're now going to begin to start cutting rates. Now, when the economy is strong, that doesn't necessarily mean that you need to cut rates, which the government has said that the economy has been fairly strong lately. So I'm not exactly sure why they are cutting rates right now with the economy being strong, but there could be a couple of reasons. And what you're looking at here is the probability that after their next meeting, which is just under a week from now, that they will cut rates again. So almost a 98% chance that they will cut rates by a quarter point. Next meeting will be in December 18th, and there's also going to be a very strong probability that they'll cut rates another quarter point or could even be a half point, particularly if they don't actually by some chance cut on the 7th. So normally with the Fed cutting rates, and I think the stated goal was to get us down to around 5% by the end of 2026. Typically, you would expect mortgage rates to follow, but if this 30-year continues to persist upwards, competing with those mortgage-backed securities, that's probably not going to be the case. We're probably going to see mortgage rates persist at a higher rate. Unemployment numbers were also released just today. The unemployment rate says was unchanged at 4.1% in October, although we only saw 12,000 jobs gained for October, and these numbers got revised as well. These numbers got revised down for both August and September. So jobs report not great for last month or for the last 3 months, which is a reason why the Fed may need to continue to cut rates in order to stimulate the economy. So with the latest jobs report coming, we're going to expect that there's probably a very, very good chance that we'll see a rate cut like we just saw, 98% chance next week, and there's going to be a good chance in December and beyond that, which is going to be January 29th. I also noticed that, where is it? Employment in the government continued its upward trend in October, 40,000, plus 40,000 jobs. So without the government jobs, we would actually would not have added jobs, because, again, we just added 12,000 for October. So you might be wondering if all these jobs, if we didn't add nearly as many jobs, and I think the expectation for October was somewhere around 100,000 rather than 12,000. Well, how did the unemployment rate remain unchanged? Well, technically, the unemployment rate was 4.14%, so it got rounded down to 4.1, and now it's 4.05%, rounded up to 4.1. So it's actually changed 0.09%, so it's just not reflected in that additional decimal right there. So employment did go down slightly. So, but how did that number actually not go down more despite such a dismal jobs report? Well, if you didn't know this, the unemployment rate doesn't factor in people that aren't looking for a job. So if you quit your job, you go on a sabbatical, maybe you get injured and you're not working for that reason, you're not actually counted in that unemployment rate. So the real number is the labor force participation rate. This number tells you how many people, what percentage of people are actually participating in the labor force. And that number has actually gone down. You can see it's slowly been trending down for quite a while, actually, but also trended down recently, which allowed that number really to stay at 4.1%, even though we did not add nearly as many jobs as anticipated. So with the jobs report, we'll expect the Fed to continue to cut rates, but the way things are looking right now, because there's a lot of different things that impact that 10-year Treasury note yield, we might not actually see rates continue to go down. Now, I would say in some cases that might benefit buyers because that might push a lot of buyers out of the market, and there might not be as much competition, meaning that it could become more of a buyer's market rather than a seller's market. In other words, there might be more buyers out there than there are homes for sale, but we're just not seeing that. The numbers just aren't there. There's still more buyers out there than there are homes for sale, which means buyers are still bumping into each other. Homes are still getting multiple offers. And I don't think that's going to change. So, hate to be the bearer of bad news, but this real estate market for both sellers, because it's going to be tough for sellers because buyers don't have as much, they don't have as much lending power as they used to. They don't have as much money. Affordability as is at, and affordability is very bad right now. So it's going to be tough for sellers too because they're not going to be able to get out of buyers what they might have been able to with lower rates. And it's still going to be tough for buyers because they're still going to bump into competition. Now, this is going to impact renters, and I'll get to you renters in just a moment. But what we're looking at for the rest of the year, and we've got about 2 months left as I shoot this. It's November 1st. This will be published here in a couple days. We publish new videos every Sunday, so I'm shooting this on a Friday. What we're going to see for the rest of the year is it's still going to be pretty tight for buyers. And even with the Fed rates coming, maybe another one in December like we saw, and maybe into January, there's a decent chance that it's still going to continue to be tight, and that's going to carry on into maybe even to like maybe the spring. We might not see some relief until that spring bump that we'll get in spring of 2025. Now let's take a quick look at housing affordability and rental affordability. There's renters out there that are saying, hey, I'm not worried about interest rates. This doesn't affect me, but it is going to affect rentals as well. As we all know, things have not exactly been affordable lately. That's true of both housing and rentals. And we don't have any reason to believe that renting is going to become more affordable. We do have some videos on renting versus buying if you want to check out one of those videos here. Look, I'm a real estate broker. I understand that there might be some bias in there. But the reality is I'm not going to try and sell you on buying a house. Buying a house is a personal finance decision, keyword personal. So if it's right for you, that answer is going to be different for everybody. For people that maybe don't have the most amount of certainty in their life. Maybe you're going to have to travel or move somewhere for some reason. Maybe you plan to get a different job. Whatever it may be, if you don't feel like you're going to be able to stay in the same place for usually 3-4 years, something like that, then buying might not be the best for you. Renting might give you a little bit more flexibility. But it's really just dependent on personal finance. So Portland rent growth over the past 12 months has slightly outpaced the rest of the country. 10 months ago and into this year, rents in Portland have risen 3%. It's a faster rate of growth compared to the rest of the country. How about annual change in median rent? We saw the greatest change back in 2021. Not a big surprise. Home prices also went up quite a bit then, coming right off of the lockdown. Like I said, these things are going to be pretty intrinsically intertwined, the rental market and the home sale market. As far as where Portland falls, kind of right in the middle with the United States. Overall, they're going to fall right in the middle. Now, as far as some of the different towns throughout the Portland metropolitan area, Beaverton, one of the larger suburbs on the west side, that's where a lot of people move for jobs. There's a lot of jobs out there in Beaverton. Saw 4.3% rent growth. Some places in Portland didn't see nearly as much. Portland proper just saw 1.3%. Now, Portland is capped out at 10%. So Oregon landlords are allowed to raise rents up to 10%. That started back in 2019. If you're not familiar with the real estate market, average home values in more of like a balanced market might grow about 3, 4, 5% per year. When the market was really competitive, really red hot, 2020, 2021, year-over-year growth throughout much of the country was right around 20% for a lot of places, really most places. Now, what are we looking at going forward as far as inventory? Because that's really what's going to impact prices. Some of the places that were the most popular to move to during lockdowns: Texas, Florida, Idaho. The bigger they are, the harder they fall, they say. So those are some of the ones that are kind of getting back to pre-pandemic inventory levels. Not so much with the West Coast, very popular to move to. So we still have low inventory in Oregon. That's still going to keep the market competitive, whether you're buying a home or renting. Thought I'd ask Google just for fun what Google thought. As of recent reports, Oregon is considered a seller's market due to high demand, low inventory, homes selling quickly. That sounds about right. So where are you going to be able to find some relief if you're thinking about buying a home? And again, I'm a licensed real estate broker, so I invite you to reach out. But one of the places that you're going to be able to find a deal, if you will, is going to be with new construction. Why is that? Well, new construction builders, they can't just let those homes sit. They have to sell them. They have to generate revenue so they can continue to build. Not the same with the resale market. People can withdraw, which is going to happen a lot coming up with the holidays. People don't like to move during the holidays. So if somebody's reselling their home that they bought, they can take that home off the market and wait and say till the springtime. So new construction builders, they just don't have that option. So in order to move homes, they have to offer incentives. And a big incentive, of course, with everything that we're talking about right now is interest rates. So what are some of the rates that I'm seeing? What are some of the deals that I'm seeing right now? I'm seeing a lot of 4.99% right now. One key to look for when you're looking at these things, this is Holt Homes, which is a regional builder. Think of them as a local builder to Oregon. Select homes as low as 4.99%. That includes appliances. Save up to $42,000 in the first 5 years. And when I looked into that, that's actually for an entire 30 years. That's not always going to be the case. You're going to see a lot of this where the builder will buy down the rate from the lender. In other words, they just pay the difference, whatever cash difference it is between 3.99 and whatever the rate is today, say 7%. So almost double that. Whatever the difference between that 3% to get them to 7 from 4 is, the builder just covers that difference out of pocket. So $399 for the first year, $499 for the second year, and then $5.879 for the remainder of the time. And again, that's on D.R. Horton. It's one of the that's a top 10 builder, what's known as a volume builder. Pacific Lifestyle Homes also offering 4.99 for 30 years, not just for the first year or two. Both for some homes in Oregon and Washington. You're also going to see some credits in some cases. This is Taylor Morrison, which is also a regional builder, offering 4.99% on a couple of different homes with a $15,000 closing credit. And I'm just taking you through some of my emails here. That's typically where we're going to find the most, us as real estate brokers, that's typically where we're going to have like the most up-to-date information. A lot of these builders will advertise, things out on their signs. But this is going to be kind of like the flash sale type of, out on their signs, out on the the lot subdivision, wherever they're building. But these emails are sort of like flash sales, typically contain the best rate. I also found this builder. They're out by Reed's Crossing, 3.99 for the first year, 4.99 for the second, 5.99 for the third. These are for attached units. I think there's just about over 100 of them in this new subdivision. So a lot of builders right now offering $499. A lot of them are 1-2. In some cases, they are for the entire 30 year. And a lot of this stuff is also going to expire by year end, meaning you have to close by December 31st. Conventional loan takes about 30 days, so you'd really need to get under contract by end of November, beginning of December at the very latest. If you're cash, you can do it in about half that time. So a lot of what you're seeing right now, going to have to close by the end of the year. These are homes that they're typically already finished. They're usually not offering incentives on homes that are currently being built and are yet to be finished. We'll expect more of this to come in 2025 if rates continue to persist. It's going to be tough for builders to move the inventory that they had anticipated moving in 2025 with rates being where they're at right now and where they might potentially be in 2025. So we'll expect the incentives for the builders to continue so that they can continue moving those homes. But for sure, right now, if you're thinking about buying a new construction, your best deals are going to be closing right before the end of the year. Another important note on new construction, you can, of course, buy a new construction home without a real estate broker representing you. It's not going to make actually any difference to the builder. The builder pays a buyer's agent commission, and they're not going to change the price of the home regardless. There's not much negotiation on these new builds. Sometimes we can negotiate some things for you. Usually negotiating in like a credit or some appliances, maybe air conditioning, something like that. Usually the price doesn't get negotiated, and usually the offers that they have, those rate buy downs, closing cost credits, there's usually not much negotiation in those things either. It is what it is. So if you have somebody representing you as a real estate broker, your best interests throughout this transaction, it's actually not going to cost you necessarily any more because the builder is going to pay for that. And if you didn't have me representing you, they're not going to give you a discount. So not too many reasons not to have a buyer's agent representing you on a new build. One big caveat when you do that, if you go to a new builder and you represent to them that you're on your own, you're unrepresented, then once you get into their system, most of them are not going to be able to take that back. So in other words, once they list you as unrepresented, and they have your name, your phone number, your email, I'm not going to be able to represent you as a buyer's agent unless you want to pay me. So in other words, the builder will still allow me to represent you. They're just not going to pay for it. So if you're thinking about buying a new home, definitely let me sign you up. Or when you do sign up yourself, make sure that to tell them that you're being represented by me. We'll probably want to have a conversation first if you're going to do that. So definitely get in touch. Any other real estate related questions? If you'd like any information about data, if you'd like to have a conversation about what to expect in 2025, you can feel free to get in touch. You can hit that QR code if you're watching from TV. That'll take you to our website where you can also find all of our contact information and more. If you want to see more videos about what it's like to live in Oregon, including informative videos that are going to update you on things that you should really know if you're thinking about moving here, make sure and subscribe to this channel. Hit the thumbs up button if this video helped you. Lets me know that I'm doing a good job, and feel free to leave a comment below if you have any questions. I'll reply back with answers, and until next time, take care, everyone.